Calls for the Big Four accounting and auditing firms to be split up. Strong property sales continue, but is the best over? And how well did your superannuation fund perform? Welcome to Fear and Greed Business News, Australia's best business podcast. It's Tuesday, the 18th of July, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up with Wayne Morris, who is the CEO of business finance provider FIFO Capital, which is a supporter of Fear and Greed.
Yes, all about what he terms the perfect financial storm for small businesses. We talk about how cash is king and the different ways that small businesses can manage their cash and actually use instruments to help with their cash flow. So it's a great chat, particularly if you run a business.
Yeah, it's coming up a little bit later on. Definitely worth a listen. And as well, while you're listening, go back and have a listen, if you didn't hear it yesterday, to our interview with Michael Miller, the Executive Chairman of News Corp Australia. Massive job. And he spoke to us ahead of Mumbrella 360, which is starting today, running for the next few days. And I believe tickets are still available for that one. Sean, on with the show. The big story this morning, a Senate inquiry was yesterday looking into the behaviour of the Big Four accounting firms, including PwC. And there are growing calls now for the firms to be split up.
Former Australian Competition and Consumer Commission boss Alan Fels was first up yesterday, and he immediately called for a breakup of the audit and consulting industry. That would mean the big four firms, KPMG, PwC, Deloitte and EY, couldn't provide both services. Fels told Parliament that Australia could lead the world in dealing with conflicts of interest at the heart of these business models. Late in the day, in fact, the last person to appear before the committee was former KPMG partner turned industry whistleblower Brendan Lyon. He didn't hold back. He said the Big Four operated like corporations with CEOs and boards, but shielded themselves using a partnership structure, meaning little oversight, or in his words, businesses that were risk-free, tax-free, and consequence-free. Lyons said effectively these companies see themselves as honest arbiters of right and wrong in corporate Australia.
Wow. And in the middle of it all, Sean, came some ferocious questioning of Deloitte Chief Executive Adam Powick, who had to defend a troubled investment scheme run by a former partner and Deloitte's apparent inadvertent breach of confidentiality around secret government information.
He sure did. He was also asked if he thought his efforts were worth 7 times the salary of the Australian Prime Minister. That's because Powick's pay was revealed to be more than $3.5 million. He quite sensibly said no, not surprising there. As the inquiry continues, it's hard to see the government doing anything but tightening regulations around the Big Four. According to the Financial Review, the four made revenue of about $10 billion last financial year, led by PwC, who made about $2.8 billion. They have more than 3,000 partners and not far off 40,000 staff. These are really big institutions and very important in the way commerce transacts in Australia. But I reckon, like financial planners, banks, tech companies, buy now, pay later operators, and a host of others, the big accounting and audit firms are about to get hit with a fair whack of regulation.
Yeah, this is a big, big story, and it's going to be continuing for some time to come. Sean, how did local markets perform yesterday?
The S&P ASX 200 closed the day down just a touch to 7,299 points. Broadly speaking, the tech sector outperformed while the energy and materials companies were the weakest. Among the large caps, Santos fell nearly 2%. Newcrest Mining was off 1.2%. Rio Tinto and Woodside both fell 1%. On the other side of the ledger, WiseTech Global and Aristocrat Leisure both outperformed. The banks were mixed, retailers generally stronger. Whitehaven Coal had a good day. It announced impressive June quarter production figures. Its share price finished 2.7% higher. And Corporate Travel said it's in the market for its fourth CFO in 4 years after the current one decided to take another job.
And what's happening in international markets?
Well, trading was cancelled in Hong Kong yesterday because of Typhoon Talim, which was southwest of the city-state with maximum gusts of about 130 kilometres an hour. And given how many people work from home and the technology we have, I thought it was kind of quaint that the weather could stop trading.
That actually seems quite odd, doesn't it?
It does seem very odd. Very odd. There's another really interesting little story yesterday. So oil prices fell And it was the result of a major Libyan oil field resuming production. This oil field, Sharara, it's called Sharara, Sharara, is one of Libya's biggest oil fields. It produces 250,000 to 260,000 barrels of oil a day.
A day?
A day.
You are kidding.
It's phenomenal. And the Aussie dollar is trading just over 68 US cents.
Whenever you picture a barrel of oil, Sean, do you picture an old wooden barrel?
No.
Oh, I kind of picture. Oh, maybe it's because I kind of grew up playing Donkey Kong, throwing the barrels, and so, which is the least professional thing I'll ever admit. And I've admitted some unprofessional stuff on this show.
I'm happy to think about that. Maybe
ponder it. I've planted the seed in your head, and I reckon it will stay there.
Righto.
All right, we'll be back in a moment with the rest of the day's business news. Sean, there was a jump in auctions across the country last week and the preliminary clearance rate across the country fell, but it still remains above 70%.
Across the nation, 72.3% of homes at auction were sold, down from 74.5% the previous week. There was a big jump in the number of houses going up for sale, particularly in Melbourne, though overall numbers are still about 10% below late last year. Melbourne had the most number of houses going to auction, 636, and the clearance rate was 74.3%. That's up 1.5 percentage points, and Melbourne, in fact, was the only capital to record a higher preliminary clearance rate from a week earlier. The Sydney rate was 74.9%, Adelaide was at over 71%, Brisbane came in at nearly 60%. Canberra was about the same. We spoke a bit about this last week, how the jump in the number of auctions could take the heat out of the market, particularly since the full impact of interest rate hikes haven't hit yet. Last weekend didn't really tell us that much on that. It's way too early, but the clearance rate was lower.
Sean, we mentioned this next one at the top of the show. If your super fund's balanced option returned 9% or more last financial year, then you are above the median, according to a ranking of super funds.
Little known ESS Super, which is actually the fund for emergency services and Victorian government employees, was ranked as the top performing balanced superannuation fund for the year ending June 2023. Well done. It provided a 13.3% return for the balanced option. Now remember, balanced options are those options which invest 60 to 70% of funds in growth assets, might be equities or something like that. UniSuper was the best of the mega funds with returns in its balanced option at 10.3%, followed by the Australian Retirement Trust at 10% and Aware Super at 9.7%. Now that's over 1 year. The super fund chiefs basically said international tech stocks, think Apple, Microsoft, Nvidia, Tesla, etc., were the biggest source of returns. Of course, super is much longer than 1 year. It's a long, long game. In fact, you should think of it over 10 years or 20 years or even belong. Host Plus remains the best performing balanced fund over 10 years, averaging 8.9%. Aussie Super is number 2 at 8.6%. Both underperformed the median during the last financial year, though. But as we like to say, it is a long game, superannuation, and it is really about the long term.
Sean, National Australia Bank has joined the other big three banks in blocking some payments to high-risk crypto exchanges on concerns about risks from scams.
In a statement, National Australia Bank said the scammers are part of organised transnational crime groups that are increasingly using cryptocurrency platforms to send stolen funds quickly and often overseas. Westpac, Commonwealth Bank and ANZ have taken similar action in recent weeks. NAB said crypto scams are a fast-growing security threat, costing $221 million a year. Almost 50% of scam funds reported to the Australian Financial Crimes Exchange are linked to cryptos. I thought that was quite an amazing number.
That's a bit surprising.
Very high.
It probably shouldn't be, but it does make sense.
Yeah.
I don't know what to make of this story, Sean. The cost of living is causing Australians to reduce their buying of kitchen cleaners, body wash, sponges, wipes, and bathroom disinfectants more than other products.
So what, we're getting dirtier and smellier on the back of interest rate hikes?
Yes, unintended consequence perhaps, but yes, it seems we are.
Leaked internal sales data from the nation's second largest supermarket chain, Coles, which was reported in The Australian, shows that people are cutting back on personal health and household cleaning products. Sales of bath soap and body wash tumbled 33% for the 12 months to May. For the 12-month period, hand sanitizer soaps and washes were down 30%. Hand wash was down 7%. Environmentally friendly cleaning products were off about 16%, and carpet cleaning products were down 11%. Now, Michael, it does sound remarkable, but it may not be as bad as it sounds because, of course, that 12 months is compared to the previous 12 months, which was a COVID 12 months. And we're all washing our hands pretty ferociously back then, cleaning non-stop. We've given that up. And I think that's probably the reason, though Coles did actually say cost of living was also impacting.
Have you ever washed your hair with a bar of soap, Sean?
Well, not since I left university.
Yeah, I was going to say, I did the same thing while I was at uni. I just wondered whether it was just a uni thing that everyone at uni just washes their hair with a bar of soap because it is the most cost-effective way to do it.
Yeah, look, I mean, some of us don't have to worry about that sort of stuff anymore in life.
Oh.
Hair washing. Yeah.
Oh, this just got awkward, didn't it? Sorry. Well, we won't linger on this for too long, Sean.
No, I do have to say, I do like to shampoo and condition my hair, even though I don't have any. And it's kind of totally ridiculous because I'm, more or less bald.
Now it's just become a scalp massage.
That's right.
All right, let's move on, Sean. The board of Fortescue Metals conducted a secret review into whether its executive chairman, Andrew Forrest, had a relationship with an employee of the mining giant, but cleared him of wrongdoing.
In a statement, Fortescue said the board had engaged law firm Seafarth Shaw to investigate after becoming aware of an anonymous letter concerning the behaviour of the executive chairman, according to a report in the Financial Review. The investigation concluded that none of the matters in the letter were substantiated. There were no adverse findings, the statement said, adding that Dr. Forrest had excluded himself from the process. Now, I'm not suggesting Dr. Forrest was in a relationship with an employee, but it is very interesting that the board thought the issue was sufficiently important to warrant an investigation. Of course, last week, Forrest said he had split with his wife, Nicola.
Sean, it was a bit of a horror day yesterday for Endeavour Group, the hotel and liquor outlet company. Its share price tumbled 10%.
It followed the announcement over the weekend by Victorian Premier Daniel Andrews of new laws closing machines between 4 a.m. and 10 a.m. and new restrictions on all of the state's 30,000 gaming machines, including forcing gamblers to preset daily limits on losses. Victoria is Endeavour's largest market for the company's pubs division. Investment analysts estimated that for every 1% drop in poker machine revenue, Endeavour's earnings will fall by about $6 million. The changes put Victoria alongside South Australia and Queensland in terms of restrictions on gaming machines.
Another company, Sean, not having a particularly good day yesterday was miner IGO, which had to write off 75% of a business it bought 12 months ago, sending its share price down 4.6%.
IGO paid $1.3 billion for nickel miner Western Areas in June last year. We talked quite a bit about that M&A deal. Yesterday it came out and said a review had uncovered high capital and operating costs and production delays. That's in the two main projects owned by Western Areas. As a result, IGO, which has had a pretty good M&A record really, is writing off between $880 million and $980 million. Remember, they bought the thing for $1.3 billion. I think that's about 76% if you average that out. IGO's acting CEO, Matt Dusky, called the write-down disappointing.
Can you imagine what's being said behind closed doors?
Wow.
God, the process that they would now go through, kind of figuring out how this has happened, that is extraordinary.
Yes, a disaster.
Now, international news time, Sean. China's economy expanded less than expected in the second quarter, with consumer spending slowing and pain from the property market escalating.
Remember Federal Treasurer Jim Chalmers over the weekend talking about the government being very worried about China? This is why. The world's second largest economy expanded by 6.3% in the 12 months to the end of June. Still good by Western standards, but not by Chinese benchmarks and well below expectations. There was a surge after the lifting of COVID restrictions in the first 3 months of this year. But since then, things have slowed appreciably. For the June quarter, growth came in at just 0.8%. Retail sales growth slowed, the property market weakened, at least industrial production has picked up a little bit. That's the good news. Beijing authorities said the global political and economic situations are complicated, but then they said that the foundations of recovery are not solid yet. So they obviously know there's a problem there. It probably means they'll provide some sort of stimulus to China's economy.
Speaking of China, Sean, climate envoy John Kerry opened the first major climate talks between the US and China in almost a year, as both sides try and push past the deep tensions between the superpowers.
Chinese authorities said they are seeking substantial dialogue this week at the gathering in Beijing, and there are hopes that the talks will spur better overall bilateral relations between the two countries. Kerry, who was Secretary of State at one point, also a presidential candidate, said he hoped the two sides would take some of the big steps that will send a signal to the world about how seriously China and the US take the common threat to humanity. Negotiations between the world's top two greenhouse gas emitters were suspended last year after the then US House Speaker Nancy Pelosi visited Taiwan.
One last one, Sean. This is interesting. Disney has spent the past few years buying assets. Now, Chief Executive Bob Iger has put a bunch of things up for sale.
In fact, over the weekend at a media conference, he basically said about a third of the company is on the block. It includes things like, the TV network ABC, the free-to-air network ABC, that has all sorts of things like rights to NBA, and quite incredible that he just said it so casually. FX and Freeform are other TV assets they want to sell. Disney's also looking for a strategic partner for ESPN. It wants to sell its TV and streaming business in India. Now, this is from the company who, over the past few years, has acquired Pixar, Marvel, and Lucasfilm. Before the pandemic, Disney's media networks generated about 35% of revenue and half of profit. Those figures, though, have tumbled post-pandemic. The streaming services, Disney Plus and Hulu, are also losing money, about $800 million a year combined. Hence, Bob Iger is looking to do something quite extreme.
Got a bit of unsolicited advice for Disney here, Sean.
Go for it, Michael.
I reckon they should sell, brace yourself for it, Mickey Mouse. You laugh, but I went to Disney on Ice last week, and I reckon Mickey Mouse and Co. have lost their appeal for a new generation. They introduced Goofy, crickets.
Really?
Crickets. Then all of a sudden they bring out Frozen and Moana and all, and the crowd goes nuts. You know what? There's a whole generation there. They could just sell off those characters, make a bundle. Everyone's happy.
Tell them.
I'll write them a letter, Sean.
Do that.
Up next, Sean, is the Fear and Greed Daily Interview. You're speaking with Wayne Morris, CEO of business finance provider FIFO Capital, a supporter of Fear and Greed.
Mostly about cash flow and how small businesses can better manage it. I think that's probably, in a nutshell, what that conversation's about, and it's a very interesting one too.
Yeah, sure is. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 18th of July, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.